All right, welcome. Today, we are going to break down a super powerful trading strategy, one that's designed to help you avoid one of the most common and most frustrating traps in the market. This isn't just about reading a chart. It's about understanding the psychology of the market and learning how to trade with the big money, not against it. So, let's just get right to it. Why do you lose on your trades? I mean, you see a perfect breakout, everything looks good, so you jump in, and then bam, the market just rips in the opposite direction and stops you out. It's maddening, right? And it happens to pretty much everyone.
Well, what if I told you that most of the time, it's not just bad luck? It might be because you are falling for a very specific trap, a trap that's intentionally set by the biggest players in the game, the whales. And to really get how this trap works, we gotta go back to basics for a sec.
Okay, first things first, let's talk about the absolute fundamentals, support and resistance. You can think of these as the building blocks of any chart. They're the key levels where the real battle between buyers and sellers is happening. Think of support as a price floor. So as the price is dropping, it hits this level, and suddenly a whole bunch of buyers who are waiting on the sidelines decide to jump in. All that demand causes the price to bounce, hopefully back up. Basically, it's where the buyers are hanging out. And resistance, well, it's the exact opposite. It's like a ceiling. As the price is climbing, it runs into this level where sellers are ready to take their profits. All that selling pressure or supply pushes the price back down. It's a wall of sellers. Now, this next part, this is the golden rule of the market. You absolutely have to get this. These levels, they're not set in stone. If the price smashes below a support level, that old floor often turns into a new ceiling. It becomes resistance. And the other way around, if the price breaks above resistance, that old ceiling now becomes a new floor or support. You have to remember this flip. It is absolutely critical for the strategy we're about to cover.
Okay, so now that we've got the map of the battlefield, let's talk about the trap itself. It's called the false breakout, and this is where the whales go hunting.
So what is a false breakout? People call it a fake out, and it's pretty much exactly what it sounds like. You see, the price will convincingly break through a key level, and that pulls in tons of traders who think, okay, here we go, new trend. But just as fast as it broke out, it snaps right back in the other direction, trapping every single person who chased that initial move. And this really gets to the heart of the psychology here. The whole point of the move is to create a fake signal. It's designed to make everyone believe the price is going to keep tanking after it breaks support. But the real plan all along was to reverse course and shoot higher, leaving the crowd holding the bag. And let's be super clear about this. This isn't just random market chaos. This is a deliberate, calculated strategy. The whales use it to get liquidity from the herd. That's us, the retail traders. Think about it. They need to fill their huge buy orders, so they engineer a panic to trigger everyone's stop losses, which are sell orders. They get to buy up everything at a cheaper price. So, the big question is, how do we not only avoid this trap, but actually use it to our advantage? This is where the strategy comes in. Instead of being the herd, we're going to learn how to trade right alongside the whales. The process itself is surprisingly simple, but it takes a ton of patience. First, you see the price break a key level. Now here comes the most important part. You do nothing. You wait. You're watching for the price to completely reverse and for a candle to close back inside that old range. That candle close, that's your confirmation. That's your signal to enter the trade, going in the opposite direction of all the trapped traders. Let's make this real. Take a look at this Bitcoin chart. Price broke a huge support level, and you can just imagine the panic selling that followed. But then, look what happened. A massive candle closed firmly back above that support line. That was the signal. Anyone who panic sold the break was trapped. But the patient traders, the ones who waited for that confirmation and bought the reversal, they were rewarded with a massive rally of over 100%. That's the power we're talking about. Okay, but I know what you're probably thinking. What happens if that big confirmation candle is so huge that by the time it closes, the price is already way up, far from your entry point? It makes your stop loss gigantic, right? So what do you do then? You've got 3 solid options. First, just check your risk. If the stop loss, even though it's big, is still within your trading plan, then maybe you take it. Second, and this is a great one, you can wait for a retest. A lot of the time, the price will pull back to that support line, giving you a much, much better entry. And third, if the risk is just too big and you don't get that retest, you just skip the trade. It's that simple. There will always be another one. All right, let's pull back for a second and look at the big picture here. Because this strategy isn't just about some clever trick on a chart. It's really about a fundamental shift in your mindset. It's about learning not to follow the herd. There's a powerful idea in the source material. The analysis precedes the news. What does that actually mean? It means the charts, the price action, will often show you what's going to happen before some big news story comes out to explain it. The whales make their move first, and then the news is just the story they feed to the masses. The chart is the truth. And of course, I have to be real with you, there's no silver bullet in trading. This false breakout strategy is an amazing tool to have in your toolbox, for sure. But it's most powerful when you use it with other forms of analysis so you actually understand the overall market direction. So I'll just leave you with this one question to think about. The next time you're watching the chart and you see that frantic, urgent breakout happening, ask yourself, are you trading with your own patient, calm analysis? Or are you just following the herd right into the whale's trap? The answer could honestly change everything for you.